So a lot of people are worried about the U.S. economy, given inflation, the uncertainty of the markets, gas prices, all of that. But compared to many other countries, we may actually not be doing all that bad. Joining us to talk more about that, our investment advisor, Bruce Allen at Bruce G. Allen Investments. Good to see you.
Good morning, Gary.
Well, let's first talk about what is happening here right now.
Okay, so what we're about to see are predictions of the U.S. economy, inflation, unemployment, and other numbers around the world from the top economists. And so we gathered all of those. We should say it just up front, a forecast from the top economists does not mean it's going to unfold, but this gives us a good idea. In 2023, U.S. economic growth will slow to 1%, and implicit in that is probably a risk of inflation. A risk of recession. Recessionary numbers are pulling those GDP estimates down so that economic growth will be a mere 1%. Inflation, which is now running at over 8, will come down to 3.7, and unemployment is going to bump up a little bit from 3.5 to 4. That may be a low number.
Okay, so those aren't terrific numbers, but when you look at other countries, how do we stack up? For instance, Europe.
Western Europe and the United States are going through very similar kinds of economic environments. Western Europe right now, and this is all the countries in Western Europe, GDP is slowing down dramatically as they are heading into what looks like a recession either in the fourth quarter of this year, beginning of next year. Economic growth in Western Europe is going to be less than 1%. Inflation next year will be higher. Natural gas prices, Gary, over there have soared because of the crisis in the Ukraine, and unemployment will be rising to 6% as opposed to our 4%.
Yeah.
So if we're racing against Western Europe, we look good.
Yeah, our numbers look a little better there.
They do. But when we look at Asia, Asia's rebounding.
Really?
Yeah, some of the COVID policies in China, and if you look at Japan, GDP numbers are actually going to increase. China's going to grow at 5.2%, a younger, very rapidly growing economy. Their economic growth this year is in the 3.5 range. Japan is around 1.5. They're actually going to step up too. So Asia is actually accelerating in terms of economic growth next year, and they have very modest inflation and very modest unemployment. So 2023 is the year of Asia.
How about that? All right. So you do say that when you look at the U.S. dollar, it's holding its own against foreign currency. Not
only is it holding its own, but anybody who predicted that the dollar would decline since December 31st of 2020 has had that was a bad prediction. The dollar has risen incredibly strongly against all currencies around the world. There's an index that they look at, and that index against other currencies is up 26%. Now, what that means is that if you were having lunch in Europe on December 31st of 2020, your $50 bought you a €40 lunch in Paris. By the way, I think that includes wine. I'm not sure.
Yeah, probably in Europe. Yeah.
Today, that $50 buys you €50. So the dollar is buying more when you travel outside the United States. And that's an indication that the dollar is up over 20% over the last year and 9 months. It's up very strongly.
So you're telling me to go take a trip. It's a good time.
I would never say that.
Yeah.
I would never say that. But if you do happen to go, the dollar has not been this strong against the European currencies since December of 2002. That's how strong the dollar's gotten over the last year and 9 months.
All right. Some good insight there. Bruce Allen, always good to see you.
You as well.
Okay, thanks. Ed?